G'day investors, this is June 20, 2023. We've got the New Zealand US dollar currency update. It's broken up into a neutral positioning on the weekly after being bearish for a couple of weeks. On the daily, we're breaking down into a neutral after being bullish for a few days. And on the hourly, we're still playing out this bearish divergence, which is approaching our target area. So first off, on the weekly, we've got a triple moving average, and the CCI 150 moving averages are not quite aligned. It's giving us this neutral signal, so avoid going long or short. On the daily, we have the likewise the moving averages of the price chart. They're starting to turn down, likewise the CCI 150 moving averages. However, they're not fully formed yet, so it's giving us this neutral signal after being bullish for a number of days. You'll notice also it came in, bounced off the 61% level, which is always a key area to look out for. If it breaks through that, there's further upside to be taken in this case, potentially, had it broken through there. Otherwise, as you can see here, it's a key area where it's turned back down from. On the hourly, we did draw this bearish divergence on the CCI versus a bullish divergence on the price chart. And you can see there the entry was when it breaks below this channel, and that was drawn back in our previous video. It broke below the channel, went sideways for a number of hours, and then it's finally broken through this descending trend line and approaching our initial target area. You could have had a target area at the 23% level, but that was pretty much equal with the breakout, so it wasn't really worth a target. So we're going to stretch it a bit and go to the 38 to the 61% levels. And that Fibonacci level was drawn between that most recent high to that significant low back there. So again, that's where our initial target area is, between the 38% to the 61%. Of course, it may not get to that level, but they generally work when it does break out of that channel. And it could even, on the other end of the scale, it could even break below this 61%, which could be a further longer term reversal of the New Zealand US dollar. So overall, a bit undecided in terms of how to take the trades. Up here, we've got the a back test of a long positioning and a short positioning back tests. So you can see there that there's no stops executed here. We only average down. So if you're going long, it averages down as the price goes against you, and if you're going short, it averages down when the price goes against you as well, in the opposite direction. And the way to avoid those average downs, for example, during that decline, you would only have taken short trades during that period, and that was from about April 2022. So going back to April 2022, you can see they're predominantly short trades on the daily, and April 2022 only short trades on the weekly. Hence, we follow the weekly and daily trends when trading the lower time frames. Again, these bearish bullish divergences are I use them primarily as a potential exit. If I was going long, for example, I would use it as an exit point during this period. That's what I use those divergences for, but you can trade them using this strategy. So to understand how to trade this and other trading strategies, reference the Patreon page and the links below. Subscribe to my page where we also use stocks, currencies and commodity scans. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.